Good evening, everyone.
Good evening, everyone.
Indeed.
Good evening. So more people are joining. For everyone, this meeting will be recorded. So if you don't want your face and name in the recording, please put yourself on mute and put your screen off. If you are okay with that, then just keep it on.
Yep, indeed.
We will wait a few extra minutes before we start.
Yeah, indeed. We're 2 minutes over the time that we said we would start. So I think it's a good time now to start. Everybody is joined. There's still some people joining, I see. But let me do already an introduction here. So today we're going to look at fund reporting. With me here are myself, of course. I'm normally the Chief Investment Officer at Fund Structuring, and right now at Fundreporting here, I'm taking mostly the lead as this spin-off is becoming bigger and bigger. And with that, I have Nick here as COO of the company, and I'll give him time to do a short introduction himself also. And I have Gus. Gus is our Chief Technical Officer, and Dirk is here also of the CEO of Fund Structuring, but he will not speak much in this exercise. We'll focus on the fund reporting part of our business, and therefore I give Nick now a little time to introduce.
Yes, thank you, Rowan, and thanks everyone for joining. Most of you guys will know me. Those who don't, my name is Nick. I work as the head of commercial at Fund Structuring, and within Fund Structuring, we created this spin-off, Fund Reporting, because what do people love more than watching their investments go up? So that's why we created this software. And if you have any questions, please contact me. My number, I will leave it here in the chat, and my email as well. I will give it over to Gus.
Thank you very much, Nick and Rowan, for the introduction. Nice to see that you all are here, ready to look at this this overview of what we've built. So if I share my screen and we can jump directly into a demonstration of what we're doing here. Can everyone see my screen? I hope so.
Yes, we do.
Fantastic. Right. So welcome all to what we're saying is the V2 version 2 of our fund reporting platform. We've been working a lot over the last couple of months to finalize our feature set, ready for a full public launch. And there's been a lot that's gone into it and a lot that's come out of it now that we're going to see today. So when you log into your fund reporting account, and you will, you may have seen this already, but to log in, it's extremely simple. You add your email, you have a user account, you add your email, you receive a code via email, you put that code into the chat, and you are logged in. You can set further security settings, like a two-factor authentication, which adds that extra layer of security as well within your account page of your overall dashboard, let's say. Now, what can we see here? We have a sidebar and on the left, which sort of gives us a quick access to our entities. These are our financial portfolios, our companies, and our asset managers, if we have any created. Today, we'll be looking at simply the portfolios and the companies, because I think that will be really what interests you guys. We also have a tasks area and a documents area, which, for example, the documents allows us to view our documents, specifically in this case, related to investments with fund structuring, and tasks. Tasks will pop up here and there if fund structuring sets a task for you, like a capital call or signing a document or something like that. You'll be able to find those within your portal in this all tasks area. Currently, this test account has no tasks open, but if they were here, they would show you. Coming back to the dashboard, what we can see here is a workspace overview. So a total net value or a total net worth of our assets within Fundreporting. I can see my entities. I'm a member or an owner of 3 entities, and an overview of how many tasks are open, documents as well. We then have this entity quick look, which takes us per entity breakdown of the current value of our assets within those entities. So some of you may have companies that are invested into fund structuring. Some of you may just have personal portfolios that are invested into fund structuring. What you will see though is the funds or the investments trickling through these companies and back down to give you your live value, your live net value at that moment in time. So if I jump into our first portfolio here, we can, and this will be sort of most of you will have this view here. We get into our assets page, and our assets page shows us, in this case, a cash asset, because we have invested in euros. So everyone should have a cash asset in their portfolio, because the money has to have come from somewhere to invest in your make investments, right? So this euro account at current splat, it is null, so it shows no, because all the money has come in and then left to go into our investments. Should this be a positive amount, I could very easily mutate some new money in today of 1,000 euros and have that shown and see how our overall asset value has spiked by 1,000 euros. And now we have 1,000 euros market value. So an easy way to add new money into your portfolio, which can then be used to make investments or to purchase other assets, or just to show that you have certain euros, how a financial portfolio would work. In this case, we also have a company asset called Test Company. We have invested 12,000 euros into this company, and it is currently at a market value of 15,747 euros. So we have received a gain of 3,747. What we can see opening up into this company is a graph of our investments, the money that has gone into the asset. So we can see that 6,000 euros has gone in over time. We have the ability to set a return profile. So if we know the kind of returns that we're going to get, and I'll get into this in a later example when we're talking more about real estate and income through real estate and how you can report on income in that way, this will be much more relevant. Reporting, where is your asset? Is it investable? Is it easy to convert to cash or non-investable? Is it taxable? All these reportings will affect how you manage your asset within the platform. You have notes. Notes allow you to add notes to your asset, simple as, and a documents area to have documents that are actually attached to assets directly. Now, we also have a liabilities area and we have a transactions area, and effectively what these show you are the transactions or the liabilities that were pulled or taken out, or loans that were taken out to purchase assets. And for transactions, when these transactions happened, a full breakdown, where did the money arrive to, where did it go out to, and you see these entries for those assets here. Now, but moving it, because in this use case, it is actually our company that holds a fund structuring asset. We move into our company portfolio, and some of you may be familiar with the name FSA notes, but this is a fund structuring product a live fund structuring product that we manage within the portal, and you guys are able to view the investment directly, or the live value of your investments directly here. So if we were to open this up, we can see that over 2 transactions, I have invested 6,000 euros, and and at a total of 12,000. And we have this graph here, which shows us the capital that we've invested in. So there's a spike on the red line because the capital went up when we made our second investment, and then how the actual cumulative wealth over time has changed based on the periods opening and closing for this investment. So you can track your assets value through this graph. What you also have is a period overview. Now, this particular investment closes its periods quarterly, and this therefore allows you to see that quarterly breakdown of how your asset increases over time. Now, Rowan, I know you wanted to go into some specifics around this, so maybe you wanted to talk about this piece.
Yeah, so what is very important here and what we got some questions over is, if first this was more buried away, and now it's really in the overview, so it's in the front of the asset. And what is also important, and feedback we got, is that right now you'll see the newest period on top instead of down, because especially when there are more periods, it starts to be like you need to scroll down a lot. So the newest period is nowadays on top. And that newest period, for example, here, as shown as period 3, it's still the open period. So as you can see, the period 3 has an open date, but not yet a closing date like period 2 did have. Now, and then you'll see the amount of nodes that somebody has in this particular product. You'll see the NAV. Now, there's a starting NAV at period 3, but no end NAV yet. You'll see the cumulative value also as a beginning, no end yet, and so on until so the fees get deducted, and then you get the end value at that particular time. Now, for this product, there are no fees, so therefore you'll see 0, but other products have. And what is also important and not so clear to see with this product, because there's no difference between them, but if there was redemptions or distributions, you would see it in the graph as well, because indeed, as Gus described, the red line is what you put in, the green line is the cumulative value. However, there's also a blue line, which is not shown right now because it's behind the green line, because the values are exactly the same. But if you would have taken cash out of this position, of course, the cumulative value return, the cumulative return would even be greater, because then you take the cash out and then it's no longer here. But we do want to show people like, okay, you also made a return. So that's also very interesting to see, and you'll definitely see that, for example, with the index products. So that's what I would like to add in this, indeed.
Great, thank you, Rowan. So yeah, if there are any questions around this, we can get to it at the end. I think that's the order of calls. So what we can look at now is, if we come out and close this, we can actually look at how within a portfolio, for example, you can start to create your own financial portfolios and utilize some of the really nice features that we have implemented here. So as we saw at the beginning, I added 1,000 euros into my euro asset. And what I can actually do is go in and purchase now an asset with those 1,000 euros. It could be a live ticker, or it could be a manual entry. In this case, we'll look at a live ticker. So I'm interested in Apple stocks. What we have is live market data embedded into the platform, which allows you to first search for certain tickers. It could be crypto, it could be stock tickers, and for exchanges all over the world. And in this case, I choose my Apple stocks, and I say that I bought it on the 4th of May. We autofill you a historical price based on the time that you bought it, and we then can give you a tentative value on how much did you pay, and the indicative rate. If I was to change the quantity, that how much did I pay would go up. The indicative rate would, of course, stay the same. Now,
and why it's indicative, I think it's important to explain, is we only can assume you bought it at the end of the day. So we give you the price of the end of the day of the past. Now, if you buy it now and exact this time, we'll have the rate of now. But that's why we call it an indicative rate, because you can change it to the actual price you purchased it for.
Precisely. We can set whether this was funded with our own funds or leveraged via a loan. We'll, in this case, go to own funds, and we run into our first stump, which is no USD cash asset found. A new USD cash out will be created automatically, and the purchase amount will be recorded as new money in. So where the platform is clever enough to say, you're trying to buy Apple stocks with USD. You don't actually have a USD cash asset in your portfolio, so we'll create one for you so that you can make this record of the purchase. So if I continue, we always have the option to add documents to our assets or anything that we do within the platform, and hit save. What we get here is our USD cash asset shown, and obviously the value is 0 because we've added the money and then sent it directly out. If we were to actually look at the ledger here, we would see that we added that 553 that we needed to purchase the asset, and then we immediately sent it out to pay for our Apple stock. What we can see here now is the Apple Inc. Asset. We paid in 553, but now the live value that we've got here is $577. We can actually see, because our platform or our portfolio is the base currency is euros, we get this automatic forex exchange based on the amount of dollars we paid and then the value of that in euros, and we can see our gain and loss. We're now then to open this up. Immediately, something really nice that I wanted to demonstrate here is that from the date of purchase, which we set as the 4th of May, we get this really nice live or end of day mark, and then the live price set for each day from the day we purchased up until this point. So we can see how the asset has grown within our Fundreporting platform over time until we reach the live value, which matches our overall asset. So a really nice feature there, something new that we've added, but I think will go a long way in making this a really nice user experience. You don't have to leave the platform to be able to see these end of day values. Now, moving swiftly on, I want to show you what it would look like to add a real estate. So my home is an easy one to think of now. In Italy, or let's say my holiday home is based in Italy, and I bought it on the 1st of May 2025, so last year. Hit continue. I paid 500,000 euros, quite cheap for a home now, and I leveraged that loan. I leveraged that home. So I took out a loan to purchase that home. That was a mortgage, we can say. And the loan amount, we loaned the full amount at an interest rate of 2% annually for 5 years. The loan start date was the day that I purchased the house. And we get these 3 repayment schemes, which take us through 3 different loan repayment schemes: linear, bullet, or annuity. And you can see the breakdown of what it will cost you overall for each loan scheme. And then if we open that up, we can see actually in table format the full amortization schedule for that particular loan scheme. So what it will look like for you paying it back over time based on what you've set here. So we can see how the annuity, bullet, and linear loans are different. In this case, we bought it with a linear loan. Continue, could add some documents, but we won't do that for now. Hit save. So just as if you bought it with your own cash, it creates that holiday home asset the same way. However, you have a liability attached to this with some information about the liability. and this 500,000 euros in from our mortgage there. If I was to click this liability, I'm then taken to the liabilities page where I can see my outstanding loans, the average interest rate, and the breakdown of the loans in table format. So if I click into here, that's taking me back to the asset. If I click back into the loan, we get this nice sheet, which gives us full breakdown of our loan scheme and our repayments, which is a really nice feature here. So what we can see is a repayment summary and what is the next payment going to be. The ledger is, of course, that we sent out the money, and we can see the breakdown here. Something that's really nice is directly from the loan sheet, I can come to the scheme, and on the first, when that payment arrives, you can directly record that payment from here. So I paid for it. My first loan scheme was on the 7th of May today, even though it doesn't really fit with our actual scheme. 100 euro. I paid with it with my euros, and in this case, I record the new money in to my euro asset to be able to pay for that loan. Otherwise, if I wasn't going to record that new money, it would deplete my cash balance. However, my cash balance is only 1,000, so that 109,000 will have to be recorded as new money in anyway to cover the shortfall.
Yeah, and what's maybe important to tell there is personal portfolios have the opportunity to just put new money in. That's a little bit different with company portfolios where the money actually needs to come from somewhere. And either then you can write it as turnover in or profit in, or you need to actually send money from the personal portfolio to a company. So it's a little bit more restricted on a company level, but on a personal portfolio, you have this freedom. And why did we do it in this way is to make sure there is a connection between actual cash flow and the assets, especially when we're at the next phase where we can connect banks to the system, which is definitely on our roadmap, where it just becomes easier than now, where you need to mimic your bank account a little bit. But also it makes sure that that you don't create extra capital where it's not there. And we've seen quite a lot of portfolios, not so much in Fundreporting, but on Excel sheets from clients where that's not really accounted for, and that it actually went different because cash flow wasn't taken into consideration. So that's why this tracking is very, very important to make a proper portfolio.
Yep, exactly. So I've recorded a reference and I can record this payment. What we've seen here is that on the 7th of May 2026, that payment was recorded. We now see that our the principal of our loan remains this, or reduces, and the interest has gone up. We paid 10,000 euros worth of interest. So this loan scheme, well, it actually makes money. The mortgage makes money, and this is what's nice about this. The liability earns money on the interest that you pay it. So this is the sort of level we're at with liabilities and how these work. We can also see that the repayment there. If I then come back into my holiday home, of course, it is still valued at 500,000 euros, and open up our home sort of asset sheet. We can come to the return schemes, and this is what I was getting at earlier. What we can do here is, because I own this holiday home and we actually rent it out to guests who come and use it for their holidays, we earn income on this asset, and we know that our asset can earns income on a monthly basis of, let's say, rental income. Let's say it started on the day of purchase, so 1st of May 2025. It has no end date, it's ongoing, it is monthly, and we make 5,000 euros a month in euros, and the collection day is on the 17th of each month, so we can create our return profile. This shows us a breakdown over the years, and we can add as many years as we want to the overview to show us what our potential earnings are over that year. So when we can see the expected income, and then the true income is of course 0 because we haven't actually recorded that it's tentative, right? This return scheme is tentative until we actually record that we earned the income. And at each line item, we can view the transactions that happened as a result of that return profile and confirm the income too, and any fees or costs or fees that were paid within that period, confirm our income. And see how on our ledger, our property has made money, 5,000 euros. That 5,000 euros has then gone immediately out and back to our cash asset on January 17th, recorded as income from my holiday home. And our cash asset is now worth 6,000 euros because at the end of the day, or at the end of a transaction flow, we try and always bring it back to your cash asset. So unless it directly affects the value of the property and that cash remains within the asset, let's say, any other transaction flow or operation that happens from a return profile of an asset will eventually arrive in your asset for whatever that transaction was, and you'll be able to go into each asset and say, okay, I see that I received the 5,000 on the 17th of January from the income of my holiday home, and from the asset I earned 5,000 and then immediately sent it back out to my cash there. So a really nice way of using return profiles to generate income for a property. You can also do compounding value growth, and this brings us towards mutations of an asset. A mutation would be the change of the value. This could just be annual growth. For whatever reason, we know that my property is going to increase in value on a monthly basis. We can set whether it's simple or compounding growth. At this stage, we'll choose simple at a basis of 1% per month. We can set an optional override amount, so a fixed amount like 1,000 or 10,000 or 100,000, and the currency is fixed to the asset, of course. We now have a open or an annual growth scheme, so we can flick between the two. And what this allows us to do is record this annual growth, or this monthly growth rather, show us how much we were going to make on the asset. So if our asset was worth 500,000, our growth amount is 5,000 because the growth is 1%. We can change this or confirm this, and we'll see the new total value there. So if I record the growth and come to the ledger, what we can see here is a revaluation of our asset of 5,000 euros, and therefore our asset now, the balance or the value of our asset is worth 505,000. This can be seen in our mutations area. Our asset is mutated by 5,000. It has gone up in value, and the source is that return profile for that my holiday home asset. Sorry, Rowan, you wanted to say something?
No, indeed, exactly this. Of course, now you're doing it with real estate, and maybe you don't do that on a monthly basis. But yeah, you can do this for any asset, and for real estate, you might want to do it yearly and revalue the property. However, the return schemes are really to help you. So the return schemes are there to, what we're going to build in is give you a future outlook on your portfolio based on your return schemes you've given. But it's also going to go into tasks where it's going to show you like, okay, this month it said that you had 5% gain in this, right? Did it really happen? Can you record if it did or did not? Therefore, you don't have to go through your whole portfolio, every asset, see, okay, is it valued correctly? Because you put in the return scheme, it's going to remind you. Let's say you put it in on a quarterly basis or on the monthly, as Gus right now did. Then you're going to get a monthly task eventually, which is going to ask, hey, did the rent come in? Because that's the first return scheme Gus put in. And did you reappraise it? Did it really go up by 1%? And therefore, the portfolio really starts helping you instead of just being a static Excel sheet that you have to attend to.
Precisely. And what we can see is, of course, that our total asset value has gone up. We know that we still have 400,000 euros worth of liabilities to repay for our mortgage, and our assets are now worth 527k. So our overall or net worth, we can say, is that the difference there. So yeah, I think, Rowan, is there anything I missed or anything that you wanted us to go through from a portfolio perspective?
No, I don't think there is. However, let me maybe do a small summary, which makes it a little bit easier. So your asset overview is really what you have. It's the investments you did. You can actually break it up in different tabs here as well. You only used one
Yes.
tab. So you can divide them if you want into different folders. Like Gus right now makes a folder for companies. It creates a different folder, and then you can actually move assets to that folder as well. And therefore, divide it a little bit to your liking. Now, with liabilities, it kind of works the same, and that's, of course, loans you'll have. And you can attach loans to assets, but you can also just put a loan in if you have a loan, like a personal loan or a company loan. You can just put it in as a liability without a connection to an asset. Sometimes that's the case. Then the difference between transactions and mutations is also something I want to highlight, because transactions are really something that happen via the bank, right? So that's an actual money flow. And mutations are stuff that happened just on the balance sheet, we would say in accounting. But mutations means, for example, I have Apple stock and it goes up by a certain amount, or I have the property, that goes up by 5,000, as we just shown. Then the 5,000 is not a cash mutation; it's a mutation. It's a value mutation, and therefore the extra 5,000 euros is not a cash transaction, and therefore it ends up in mutation. So that's the difference between transactions and mutations. Now, and then tasks and documents, they kind of speak for themselves. Documents can be attached to anything, so even to a transaction, to a ticker, to an investment, anything you want. And with tasks, that's the same setup. So yeah, that's the initial one. Now, if I also want to focus a little bit on the roadmap, because this is what we have now and what everybody can use right now. And that's already very, very cool. Now, and especially it's nice when you build out your portfolio. Now, what we have in the roadmap is that you can also really go back to any date in the past and see what your portfolio was worth at that particular moment. Also, an important add-on that we want to do, which I shortly spoken about, is the connection with banks. And therefore being able to actually not record all the transactions by yourself, but actually have the bank and match them. Now, this is something we're trying to work on next. But yeah, let's say it's 3 months out before we completely have that operational. And what is also important, I think, and that's something we are also aiming for this year, is because all the data is here, to build in on your portfolio and only on your portfolio, not company-wide or site-wide, but only on your portfolio, your own LLM. So that's the roadmap ahead. And yeah, let me give it to Nick to close off.
Yes, thank you, Rowan. I think your internet got a little bit tough, so if something wasn't clear, don't be afraid to ask questions now. We're all here for a little while. Also, if you have other questions that you'd like to speak privately, you can send a message to support@fundreporting.com for all your support messages for your own portal. If you'd like to speak to me, you can send me a message. I just dropped my contact details in the chat. That's n.horstman@fundstructuring.com. So yes, let's start with the Q&A. If you have a question, please raise your hand or please send it in the chat. It doesn't look like we have many questions today. I'll give everyone a little bit more time to see if something comes up to your mind. If not, we'll just end it here. And I want to thank everyone for attending this webinar. And like I said, please send us a message if you have any questions.
So thank you all. And
Thank you
great
so
to
much,
have you all.
everyone, for listening.
And of
Thank you.
course, this video you can look back, and we'll circulate this, and you can look at your own leisure and your own time.
Yeah, the
Thank
recording
you
of
all.
this video will be distributed by our newsletter tomorrow. Thank you.